All right, so in this video, I'm going to be teaching you my one setup for life. And now what I mean by this is that I can literally trade this setup whenever it is presented to me. Whenever I see this setup, I'm going to take it 100% of the time. Well, before we start, just want to let you know about myself. I've been trading for almost 8 years now, and I've helped over more than like 100 students so far get funded and get their like first payout and consistent payouts. All right. And in this video, I'm going to teach you my one setup for life. And all I ask from you in return is just hit the subscribe button. And that's pretty much it. So let's start with the video. All right, so this is very important, all right? So every candle has a power of 3, but you do not want to trade every single candle, right? Also, you need to have some form of context behind the power of 3 that you are taking. So for example, if you're a beginner, what exactly is a power of 3? It is basically an accumulation phase where price consolidates, and then we have a manipulation phase where price sweeps liquidity, and then we have distribution phase where price just keeps pushing up, right, towards the original direction. That is the point. So now every candle, if we look at it closely, like you can see that every candle has these wicks, right? This wick over here, well, that is where the manipulation happened. And then when we closed up here, that is where the distribution ended for that specific candle. Now 95% of the candles are gonna have a wick to the upside or to the downside. Now our goal is basically to take an entry somewhere around here so we can capitalize on the entire move and make shit ton of money, if that makes sense, right? So over here we have another wick here, right? We have another bearish wick here. So that is the point. Now this setup is very specific and it appears on the one candle, right? And that is basically the 10 a.m. 4-hour candle. Okay, now we do not want to take power of 3 blindly for the 10 a.m. candle. I'm going to explain the entire strategy. Do not skip any part of this video because this video is very important. And if you miss any part of this video, this might not work for you. Sadly enough, it's just not going to work for you. All right. So here is the thing, right? Let's say that we have a 10 a.m. candle right here and that just opens, right? So you will see that price might have like a wick here. And let's say that this candle closed bullish, right? So this was a bullish candle. Let me make it a bit like this. Okay. So we opened, this was a 10 a.m. 4-hour candle. And to clarify, this works with gold futures and NQ futures, all right? You can trade it on gold as well, this Forex pair, but the timing is gonna be 9 a.m. But if you're trading futures, the timing is gonna be 10 a.m. Remember that. Now, this is how you would have entered, right? So first thing first, we need context, okay? We need to know where price is going to distribute towards. We need intraday bias. I'm not talking about daily bias. I'm talking about intraday bias. And there's a very easy method to basically find your intraday bias. I'm going to teach you all of that stuff in this video. But let's learn how to take a trade when we are looking to catch a 10 a.m. power of 3. So you will notice that on the 4-hour, when this 10 a.m. candle closes, you're going to have this wick, right? But our goal, as I said before, is to take an entry somewhere around here. So as soon as the candle opens here, the 10 a.m. candle on the 4-hour, what you want to do is drop down to 5-minute time frame, okay? You will be dropping down to 5-minute time frame. Now, let's say that, okay, I think let's just do it like this. Okay, let's keep it here, the open here. And let's say that there was, let's say price open here. Okay, perfect. So what you want to do is look to the left side of the open. Okay, left side. Okay, now my camera is inverted, so maybe you'll be seeing me pointing to the right, but left side of the open. So let me do that, left side. Okay, so look to the left side of the open, right? This is the opening price. Look to the left and mark out 5-minute time frame liquidity pool. Now this could be any high or low, right? So for in this case, we have what we have is this low over here, right? So this is on the 5-minute time frame, and that was engineered before the candle opened, the 10 a.m. candle opened to the left side, right? So as soon as candle opens, first thing first, I'm going to teach you how to determine that we're going to only take longs, right? Because this price can simply just reverse down from here. And that is why we need intraday bias. And next up, I'm going to teach you how to identify your intraday bias. So, but first I'm going to teach you the entry model, right? So we have a sweep of the 5-minute low. Now what you're looking for is either change in a state of delivery or inversion of the first presented fair value gap of this 10 a.m. leg, okay? So when we sweep this low, this is what it's going to look like, right? So we go down, we sweep out the low, and then we probably get like change in a state of delivery on the 5-minute time frame, and then you can basically take your entry from that, and you're going to get the full distribution move to the upside, or you can look for inversion to the upside after price sweeps some form of liquidity pool. Okay, now we know how to enter, right? We look for the 5-minute lower high to be swept that was formed, engineered before 10 a.m. candle open. But how do we know that that liquidity sweep is going to push the price up? How do we even know that the power of 3 for the 10 a.m. is going to be bullish or bearish, right? And I have a technique for you. I always have a solution, guys. All right? I do not give you like partial information and then leave you confused. That is not my goal. So throughout the day, you're going to have a 2 a.m. 4-hour candle, the 6 a.m. 4-hour candle, and 10 a.m. 4-hour candle. So we're going to use the 2 a.m. and 6 a.m. 4-hour candles to determine our bias. So let me just remove this, and let's say that this candle right here, right, is the 2 a.m. 4-hour candle. I'm going to give you guys examples as well, so don't worry. So we have the 2 a.m. candle here. Now, what we want to do is look for the 6 a.m. candle to tell us what the price wants to do for the 10 a.m. candle. So if the 6 a.m. candle closes above the high of the 2 a.m. 4-hour candle, then my bias for the 10 a.m. candle is going to be bullish. Just like the daily bias technique that I've taught before, if we close above the 2 a.m. candle, the 6 a.m. candle closes above the 2 a.m. candle high, the bias for the third candle, which is going to be the 10 a.m. candle, is going to be bullish. All right. So when we open for the 10 a.m., we will know exactly what to look for. So we will look for sell side liquidity sweep, and then we'll try to enter somewhere around here. Okay. Now here's another thing. So let's say that price just wicks above that candle. So this is the 2 a.m. candle. This is the 6 a.m. 4-hour candle. Remember that. Now we wick above it, but then we close below the 2 a.m. candle high. In that case, our bias is going to be bearish for the 10 a.m. candle. All right. So when the candle opens, let's say around here, we're going to have a bearish power of 3. Okay, because we failed to close above the 2 a.m. candle high. So we're going to have a bearish power of 3 like that. And our goal will be to enter somewhere around here. Similarly, we will look for buy side liquidity sweep on the 5-minute. Any high that is swept on the 5-minute that was engineered before the 10 a.m. open. The 10 a.m. open is here. Look to the left side and you will find a 5-minute lower high. Wait for price to sweep that lower high. In that case, that would be a high. And then look for change in a state of delivery or inversion and take your goddamn entry. And then there is one more scenario where price sweeps the high and then it also goes down and sweeps the low of the 2 a.m. candle. In that case, we have no clear bias, and then I would basically just skip that day. I'm not going to be trading because price has swept the 2 a.m. high and 2 a.m. low, and we don't have a clear directional bias. Price can go anywhere from here. And then there's one more scenario where price doesn't sweep the high or the low as well. In that case, I would not trade as well. I would just skip and I would just move for the next day. So now that we know how to identify our bias, guys, let me give you guys a lot of examples, and that is going to clarify each and everything. All right, guys, so here is example number 1, looking at NQ. So we'll start our day by looking at the 2 a.m. and the 6 a.m. 4-hour candles, all right? So we have the 2 a.m. and look at the 6 a.m. one, right? We closed above the high of the 2 a.m. So the bias for the 10 a.m. power of 3 is going to be bullish, okay? So also notice this is a extra confluence. We have a fair value gap to the downside as well, but it's not necessary. Although if it's there, it makes the setup more high probability. So this is the 10 a.m. candle. Just mark out the opening price and let's see what happened with this candle because we already had a power of 3. So now this next step is dropping down to 5-minute time frame. So notice that we have the opening price right here. Now look to the left side and mark out liquidity pools. So we have this low over here and also we have a low over here. Now the next step is look for a change in the state of delivery or inversion. So over here, this down close candle swept liquidity, and when price closed back above the body of this candle, that was your entry on the retest. Or you could have waited for an inversion, which happened right here, right? And then on the retest, you could have taken your long entry. So let's say that you took your entry right here. You put your stop always below the low, and then you can simply go for 1 to 2. Or what I like to do sometimes is use standard deviation projections, even though they are not like 100% of the time accurate, but then they definitely help you with your take profit levels. So I'm not sure if price went up there, but we'll see what happens. I think it's just reversed down after that, right? Yeah, at this point, I don't want to be in a trade anymore. So I would be happy with my 1 to 2, or I could have just simply targeted this high over here. But again, the standard deviation tool is a good tool that you can use to project your targets, even though it's not going to work every single time. And then the risk management is that you go break even at 1 to 1 or 1 to 1.5. And once price reaches 1 to 1.5, you can take one partial, around 30% of your entire position, and then leave the running towards the buy side or till 1 to 2 risk to reward or 1 to 2.5. Let's move on to the next example now. All right, guys, so here is example number 2. So over here we have the 2 a.m. candle, and then we have the 6 a.m. candle. So the 6 a.m. candle closed above the 2 a.m. candle's high. So the bias for the 10 a.m. candle is going to be bullish. So we'll try to enter somewhere around here. Now, even though it may look like a bearish candle, but when I go down to the lower time frames, you will see the price when pushed down, it then pushed up. Okay, so this is when the candle opened. So let's drop down to 5-minute time frame to see what exactly happened, right? So this is the open, right? So mark out the liquidity pools to the left side of the open. So we have one low over here, one low over here, and then we also have London low resting around here. Now we have these consecutive bearish candles that swept liquidity. So when price closes above these candles, that is going to be the change in the state of delivery. If you want to take a refined entry, you could have taken from the last candle of the auto block, but I would just take a long from the retest of this level. Stop always goes below the low, and for the target, I was always going to go for 1 to 2 basically, because that's my default risk management. And again, you would be break even here, probably with one partial. And then finally, during the next day's Asia session, we hit our full TP. So let's move on to the next example. All right, guys, so this is going to be the last example. So you can see we have the 2 a.m. candle, the 6 a.m. and the 10 a.m. So the 6 a.m. candle closed above the high of the 2 a.m. candle. So our bias for the 10 a.m. candle is going to be bullish once again. So if I mark out the opening price of this candle, you will see we'll get our entry somewhere around here. So let's drop down to 5-minute time frame and notice the opening price. So start marking out the liquidity pools to the left side of it. So we have a low over here, and then we have one low over here. Then we of course have low over here, and then we have one more over here, and also we have one over here. So after we swept liquidity, we never got change in the state of delivery until we swept out this low and also this pool of liquidity over here. And that's when we had consecutive bearish candles that swept liquidity. And as soon as price closed above it, and most of the time, I just like to enter directly without a retest, because I know for a fact that we're going to get a big move since it's a 4-hour candle power of 3. So I don't worry about that stuff. And I simply go for 1 to 2. And you can see that the target was hit. If you're interested in me, not me, but like if you're interested in watching me live, if you're interested in watching me live trade every single day, there's a link down in the description, and you get the full SMC course, fast SMC course, and you get my mentorship, not mentorship, but like answer every single question of yours, and all the beautiful benefits that you can get. There's a link down in the description. Check and see if you qualify. but it is not necessary. This is all you need. Trust me. Goodbye.